Our topic today is a very important one, a very complex one, and a very pressing one. Our climate has warmed since 1948 and will continue to do so in the future. This has led to increasing climate-related events like wildfires, floods, and severe storms. And these are increasing in frequency and severity, and as well, their financial toll is increasing significantly. The warming effects are largely due to human influence, and efforts are being made to cut greenhouse emissions and slow the rise in temperature. This is being done by various stakeholder groups relevant to our business, including governments through accords like the Paris Agreement, banks and insurers through pledges to put combating climate change at the center of their work, including putting green investing and lending on a firmer footing, and as well, regulators that are concerned about climate-related risks, both physical and transitional, and the impact of these risks on financial institutions are placing requirements on financial institutions to develop greater resilience to and management of these risks. There's so much to this topic, from the theory to the science to the practical applications and the implications. Whether you are very knowledgeable about the topic or know very little, I do believe you will learn a lot from our speaker. Paul Kovacs is the founder and executive director of the Institute of Catastrophic Loss Reduction, the ICLR, located at Western University. Paul is an expert and leading authority on insurance and climate change. He has more than 30 years of experience in the industry. He works with stakeholders from across the spectrum, from researchers to government, insurers, builders, as well as regulators, investors, and lenders. He's contributed to numerous international and Canadian reports and organizations on how to tackle the issue to reduce the risk of loss from earthquakes, floods, and other such risks. So now I will pass it over to Paul Kovacs for the presentation, and I hope you all enjoy.
Vaughn, thank you for the kind introduction. Thank you for the opportunity to be here today. And for everyone who's tuning in, you had other things you could be doing. Thank you for being here and for participating in the session today. As Yvonne mentioned, we'll take 30, 40 minutes to go through about 15 slides here just to share some background. I really look forward to the conversation afterward. So please save up your questions and I look forward to talking with you. Before Laura takes us to the first slide, I usually do this presentation in person. I miss spending more time in person, so I hope to see those of you I haven't met before at a session sometime not too far down the road. I open my sessions with two questions. It allows me to get a sense of who's here in the audience, but importantly for you, when you do this in person, so you'll have to imagine a little bit with me, it gives you a sense of the others who are here as well. The two questions that I start my presentations with, the first one is, in your opinion, where you're living, does the weather recently seem to be meaningfully different than it was 25 years ago? This is not a science question. This is your opinion. Does the weather seem to be different than it was 25 years ago? And either yes, it is meaningfully different, or no, it's not meaningfully different. The second question that I ask is, in your opinion, 25 years from now, do you think the weather where you are will be meaningfully different than it is now? When I do this for most audiences, most of the time, the vast majority of the people standing next to you and the people involved will put up their hands saying that they think the weather has changed in a meaningful way over the last 25 years, and they think further meaningful change is coming. When I was doing these kinds of presentations 25 years ago, that wasn't what happened. Most people did not think there was change happening. They hadn't really seen anything change. They didn't expect much change to happen. But that has certainly been a shift in how people feel about the issue of climate change, that they are noticing things are different and they're expecting things to be different. For 20 years, I was part of the Intergovernmental Panel on Climate Change, working for the UN as a volunteer. And the science shows that the weather has changed. That's what the science says. And the science is predicting meaningful change coming forward. So the topic I'm going to speak with you about, how do you put climate resilience into home financing? My group, I've got about 50 scientists I work with. That's all we do for 25 years. We've been talking about how you can have a home that will cope with the kind of weather we're having now and the kind of weather that's coming. And not increase the risk of default, increasing the risk of all kinds of bad things if your home isn't prepared for the kind of weather we're having and the kind of weather we're expecting to have. So climate resilience, we know what to do. How do we build it into home financing? How do we build it into what society does? That's what I'm going to talk with you about today. Next slide, please. Thank you, Laura, for the help with the slides. So I founded the Institute for Catastrophic Loss Reduction. We've been operating for 25 years. We focus on the science so that extreme events, extreme climate and seismic events are less likely to cause damage. This is for homes, for businesses, for public infrastructure. That's what we do. You want to know what to do to protect your home? Call us. We're a center of excellence. We get funding. 120 insurance companies give us money every year. We get money from government. Almost half of our money comes from government. We're based at the university. What 25 years of research tells us, we know there are proven resilience practices that will reduce the risk of damage. We're just working really hard to get people to do it. Next slide. Thank you, Laura. I was invited to talk to you about climate change. I want to make sure that the term climate risk is something that the audience is comfortable with. And I want to explain what I mean when I say climate change, but what I mean when I say climate risk. 30 years ago, there was a meeting that was held in Rio de Janeiro. Canada and all the other countries, I think there were almost 200 countries at the meeting, had a conversation about the environment. And it was agreed 30 years ago that the number one environmental issue in the world was climate change. For 30 years, we've had annual meetings. It's going on right now, this week, last week and this week in Egypt. We have an annual meeting discussing how this is going. And in summary, not very well. The two things that the world promised 30 years ago, we would prevent the emissions of greenhouse gases from becoming dangerous. Unfortunately, for 30 years, they've been going up and up and up, and they're definitely dangerous. And we agreed 30 years ago that the increase in severe weather damage would be brought under control, and it has not. It's been getting worse and worse. So there is a conversation in Canada and globally about climate change. It's usually what the government and what society should do about the issue, and it usually ends with unfortunate news that it hasn't gone very well. There is a younger conversation about climate risk. Climate risk, usually split into transition risk and physical risk. Climate risk is for all the rest of us who are living in a world where the management of climate change isn't going very well, are at risk. There are risks associated with the promise to do something about greenhouse gas emissions is going to lead to a number of changes by society, changes by governments, to try to achieve the transition that needs to be done to a low carbon future. And there's a lot of risk associated with whatever is going to happen to get from where we are, which is not a good place, to where we need to be. So there's many, many different risks along the way, risks and opportunities to get from here to there. Physical risk is related to the damage that's occurring and the long-standing trend of increased damage. And so what is it that we're going to do? What are the uncertainties and risks, but also some opportunities of greater threats to property? So there is a conversation, a government policy conversation about climate change, and there's a different conversation about climate risk. I'm actually spend most of my time talking about climate risk, and in particular, physical risk, what can be done about the risk of damage, direct damage to buildings, to infrastructure. Next slide, please. I'm trying not to give very many complicated scientific ones. This one is perhaps the worst one I'm going to show you today, but it's worthwhile if you can patiently go through this one with me. So I have a graph. On the left is how much warmer the world has become since 1870, or is expected to come in the years ahead. So on the left, going up 1 degree, 2 degrees, 3 degrees. Across the bottom is the total emissions of carbon dioxide since 1870. So not any one year, this is all the years from all the countries, from all the different people, all the different businesses, all added together as we best understand it. So why did I put this graph here? So some of the volunteer work I do for the United Nations, the message we're trying to get out there in terms of the science, there is a one-to-one correlation. If we have more cumulative emissions, we have a warmer world. The line is a fairly straight line. And so if you don't want a warmer world, you have to have less cumulative emissions. You have to stop adding. The black part of the line is what's already happened. This is history. The world is already more than a degree warmer. We started in 1870 because that's when we found oil and started to build that into what we do as a society and increase our use of coal and other fossil fuels. After the black line, there are three lines, blue, orange, and red. Those are predictions saying where we go from here depends. We could follow different paths. Here's three of them, but there's different futures for us. If you want to know how much the climate will have changed by the end of the three lines, by the end of the century, there's large differences depending on what society does. We're having another meeting this week in Egypt to talk about this. If we make some decisions and really be aggressive, we're closer to the blue line. And if we don't do very much, we're close to the red line. So what we choose to do will have a very big impact on what happens to the weather, here measured by how warm it gets. And the further out, the more dangerous the weather is. The two other ovals, one looking ahead to the year 2030 and one looking ahead to the year 2050. What they're meant to say is there's change going to happen in the weather over the next 10, 20, 30 years. That's already determined. Like we know more change in the weather in the 10, 20, 30 year time frame. It's quite sure. What will we do about switching to electric cars or insulating our homes? That has a huge impact for the year 2100, but doesn't have much impact for the next 10 or 20 years, because that's based on this long history of what we've been doing for more than 100 years, 150 years as a society. Anyway, a somewhat complicated measure, but it's trying to say there's a very clear, scientifically rigorous correlation between cumulative emissions and temperature or climate. And what's going to happen in the next short period of time, depending on how you define short, the next 10, 20, 30 years, is pretty well decided under all the different scenarios. We know with a lot of certainty what the weather is going to be like if you're planning for your business, for your company for the next 10 or 20 years. Where the biggest uncertainty is when you look further out, when you look out to the end of the century. And that depends on what we do about emissions now, not later. Thanks for your patience with a difficult slide. Next slide, please. This slide was generated around the time, 2015, of the Paris Agreement on Climate Change. The red line shows emissions in any given year for a 100-year period, more than 100 years. And the black line is the trend most scientists think we have been on. And the blue lines are what we agreed to do as a world in Paris, the future we're trying to get to. What you should see is that, the last 30 years when we've been trying to do something about emissions, we haven't got very far. Things have been getting worse, not better, even though we've been trying for a while. A few downs, but a lot of ups for more than a century there. So a very well-established trend of more use of energy. And we're trying to break that, and it's proving to be very hard to do. And the promises to get from the trend that we're on down to where we want to be is not going to be easy by anybody's fashion. Intriguing now, because it's taken us so long to really start to do something about this. We not only have to have reduced emissions, we have to get below zero. We have to have net zero is the new conversation to be able to stop the world from having dangerous warming. Net zero means whatever energy we use, we offset that planting trees and various other ways that things are absorbed. So the challenge moving forward to try to achieve progress on this is very, very difficult. Next slide, please. So besides the challenge associated with transitioning to net zero and a low carbon future is the challenges associated with physical damage. This red line shows damage that has happened in Canada from severe weather events, hurricanes, wildfires, flooding. It has a lot of ups and downs, a lot of noise in this. I'm an economist, so there's a lot of noise in the trend. But the purple lines are trying to give you a sense of the trend here, the 40-year trend. It's not the last few years are different. This has been a long-term trend of rising events. I put a circle around the three worst years, the ice storm in Quebec, the flooding in Calgary, the wildfire in Fort McMurray. The sense of our future, 5, 10, 15 years from now, those extraordinary events that many of us remember quite clearly will become annual. And this is the trend that we are on, trying to give you a sense here. This is a very uncomfortable, very dangerous trend. I'm only looking out 10 years. If you tried to look out in the earlier graph where I tried to look out to the end of the century, I mean, the numbers get so uncomfortable that it's just not a prediction. This is just a sense. This is where we're going. We've got an established trend and not too far ahead. This is very uncomfortable. I'm going to do an upbeat story about all the things we can do to break this trend, but the trend we're on is fairly well established and very uncomfortable. Next slide, please. So the work our research institute does as Canada's leading group looking at earthquakes and climate and how to build resilience is focused right now around 3 programs. So the first program is all of us live in existing homes, and these homes are vulnerable. Every home in Canada could be made more resilient. We have a center at our university where people can come and walk around and see actual hands-on examples of how to make a home more resilient. We have a backwater valve. We have wildfire resilient siding. We have impact resilient roofs. We have hurricane clips. You can see very low-cost, proven techniques that can make an existing home more resilient. We have an awareness program. We have brochures, handouts. We would love to have any of you hand out to any clients whenever you meet them. Brand them with your name on it. Just make sure you don't change the message because the message was carefully worded and is proven to be helpful. The awareness material we have not only tells people how to protect their home, it has a questionnaire that allows the homeowner to give themselves their own assessment. There's about 10 questions, 12 questions for most of the different hazards. You walk around your home and you score yourself and you say, I'm fine, or I'm not. And here's why. I got a very bad answer over here. We're also running a Showcase Homes program. We've got a blitz happening this summer with one of the banks in Alberta. But this is where we go in and retrofit a home and have the media and others come in and see what we did and how we made a home more resilient. Work with the community, work with the media to try to show for existing homes, they can be made more resilient. There are proven techniques, just most people are not doing them right now. Next slide, please. Here's an example of some of these brochures. We find that people don't get ready for climate change, they get ready for floods or they get ready for wildfires. I mean, there's specific hazards. For any one of the hazards we think can bring a material risk to a home, we have advice. We have a checklist about how to know whether you're at risk, and we can specifically describe what needs to be done. Sometimes you just do it yourself, a little change in landscaping or a small alteration in your property, and you reduce the risk quite a bit. Other times you have to hire somebody and they have to come in and do it. But the idea is to work with others. We've done most of our work with municipalities, with insurance companies. We'd be delighted to work with lenders and anybody else who would like to take this kind of proven information sharing to empower homeowners with knowledge so that they can be better ready. This is the first of the 3 broad areas where we think is the path toward resilience. In this case, focused on existing homeowners so that they are empowered to protect themselves. Next slide, please. Last part of this is the most common issue. This poor woman on the left, you have heavy rains and it gets into your home. Typically costs $30,000-$40,000 to repair a home after water gets into your home. You put in one of these valves so that the pipes that you want to take water away from your home when you flush the toilet cannot allow water to come in on a rainy day, just by having a valve that floats up and closes if water tries to come in your home but allows water to go out. A $250 device can avoid $30,000-$40,000 worth of damage. And so explaining this to the public, coming, seeing our displays, reading our brochures, helping people know relatively low-cost actions. We have a number of other actions, but that's just one, will help reduce the risk of an extreme climate event causing physical damage to homes and to other buildings. Next slide, please. We have three broad, perfect, thank you. We have three broad themes. The second focuses on new buildings. When you are focused on existing buildings, most of our attention focuses on the owner and of the building, the homeowner. When we focus on new buildings, it's the builder. It's sometimes the government officials that create the rules for construction. We're building a lot of homes in the country. There has been a commitment in several provinces and by the government of Canada to accelerate the construction of new building in Canada. With all of this work, we are hoping that when you first build the building, you put resilience features in. We have documented our advice for builders and for others interested in what makes for good new construction. Our advice on basement flooding, on wildfires, on hail, on severe winds, all the big hazards that have the greatest impact on homes. We have very detailed, specific advice. We're trying to work with builders so they might voluntarily do this. We're definitely working with governments sometimes to put this into codes if that's where we are willing to go. We also have a specific program with the terrible name PIVC that's focused on government infrastructure so that the government infrastructure is built right the first time. There's a lot of money being spent on homes and infrastructure. If you do it right the first time, it is much easier to take care of it and keep it up. It's far more cost effective. Small change in the cost of initial construction, sometimes no increase at all, can lead to a huge increase in resilience if you do it during initial construction. It's sometimes a little bit harder to add it to an existing home, but the same features can be put in new for almost very, very low cost. Next slide, please. On the lower left, this is a photograph from the village of Lytton in British Columbia. A fire burned it to the ground last year. We're working with the community about how to build resilience in when the first rebuilding of the homes take place. The document on the right is the handout that we gave to everybody in Lytton with the community of Lytton. Shows all of the specific things that we're recommending, very basic, simple things. Make sure your roof is resilient to fire. Make sure your siding is resilient for fire, your decks, your fences. We think that the cost of putting back a home that is resilient to fire will be on average about $5,000 more than the cost of putting back a home that burned last time, that would burn next time. Lytton has burned to the ground twice over the years, and it has fires every year. To put the homes back with all the fire resilience that we can recommend would cost an extra $5,000 and greatly reduce the risk that the next fire will cause any buildings in the community to be lost. Next slide, please. The third of the three broad areas we're working on, besides focusing on existing buildings, focus on new construction. We've chosen, and we're kind of unique in the world, to do a special focus on helping communities right after an event. This is our Build Back Better initiative. This is called our Resilience and Recovery Program. So we've published 100 case studies of communities that have done good things about climate change to make their community better prepared to climate change. One of the themes we found when we had finished writing up 100 stories here was that most of the communities did these good things after something bad happened. There is a greater community willingness to deal with all of these ideas we have about new construction, about retrofitting existing buildings. There's a greater willingness to do these things after something terrible happens. Of course, we'd love it to happen before, but we're trying to work with the flow, and we're recognizing a lot of the good things we have seen in the country happened after events. We've put together a program targeting the insurance industry so that the insurance industry will start to think about changing its approach so that after a big loss, the goal is not the traditional approach of putting homes back the way they were, where they were, but to consider and work with the homeowner. Could the home be put back better than it was before with resilience, maybe in a different location for some things like flooding? Our resilience and recovery program, we've had some early successes. In Calgary, they brought in a financial incentive program so that homeowners who put in extra resilience got $3,000 from the community. It was so successful, the community actually had to stop the program because they ran out of money. But it was a sign that the community were very, very receptive, and the public action to continue to put in resilience has been sustained even after there weren't financial incentives. The awareness itself has kept up some very good actions in Calgary. We gave them an award for the work they had done last month. In Barrie, they had a tornado, and we worked with the community. They did an awareness program, explored the idea of an incentive program, but chose not to do that. But they have been approaching, in Calgary and in Barrie, approaching the government with us to try to change the building code regulations so that new construction will include resilience in all new buildings. We haven't got there yet, but they're working with us to try to discuss that and see if we can get the provinces to make changes. And I mentioned in Lytton that we're actively working with the community to try to pass regulations so that all the buildings rebuilt in Lytton are going to be fire resilient. So we're finding early success with our program to try to offer our scientific support, volunteers to work with communities after an extreme event to do better. Next slide, please. So at Calgary, we had a terrible storm. This is a June, July summer day. And this home is just a mess in the storm. And so how can we build resilience back into that community? So having the community commit $5 million for rebates and run out of money because it was so successful, an awareness program and lobbying for building code change. Next slide, please. I'm moving to my final two slides. Our group at the university have found great rapport working with government, great initial response from working with insurance companies. We would find it really exciting to work with the lending communities and others who also see great potential to improve the success of your business by having less storms cause damage and lead to default, lead to all kinds of challenges because homeowners are not as prepared as they should be for today's weather and the increasingly severe weather coming. One of the most important arguments for collaboration, we are finding that every dollar spent on resilience typically results in $5 to $10 of avoided damage. The economics, as an economist, the economics is overwhelming. We've seen President Biden regularly quote our report about the enormous potential and economic benefits of doing resilience. However, those who have to spend the dollar to save $5 to $10 are not the same as the people who save the $5 to $10. If you ask somebody to retrofit their home so that the bank is less likely to have them default, so that the insurance company is less likely to need to make a payment, the benefits are going to other than those experience the cost. This is showing up most directly in the conversation we're having with home builders. Home builders are saying, thank you, an extra $5,000 to add wildfire resilience in Lytton. I heard you say an extra $5,000. It's very hard to build a home, keep it affordable and selling it, and you're asking me to add $5,000. I will say that the home is better. I can see the home is better. I can explain to the buyer the home is better, but I'm experiencing an extra $5,000 in cost. Where we think the solution is going to come is we need to have more of those who are benefiting from resilience, lenders, insurers, governments, who don't need to experience default, don't need to experience insurance damage claims, who don't experience disaster recovery claims in government. Can they build in a package of incentives so that the owner of the property, the builder of the new property, see enough of an incentive to say, okay, I will do this. In Calgary, we offered just $3,000 to rebuild homes after you saw the destruction in some of those images. $3,000 was just the marginal cost, but it was enough to make a terrific change in behavior where we have this long waiting list of people who would still love to have got the money if they hadn't run out. You don't need to cover all the costs. You need to cover the marginal cost to try to get these big savings. Anyway, I think there's a great opportunity coming for a collaboration between lenders, insurers, governments, and others. We need to get around the table too. But those who are going to come out ahead, if they can provide the right kind of incentives, somebody who gets a loan with a resilient home has a lower interest rate or better terms and conditions, some sort of acknowledgement to inform them, but also to reward those who do the right thing, is the future we need to get to. And it's one of the key reasons why the science is clear, but the number of people who are acting on this is not at the level we need to get to. Final slide, please. So the point of the conversation today was to build climate resilience into home financing. There are proven, affordable solutions for the severe weather hazards that we are experiencing today in Canada. The global conversation and the national conversation about climate change is not going very well. It is bringing risk. That's the new focus of the conversation. What does it mean for my home? What does it mean for my company that the world is going to transition to a low carbon future, a net zero future, but we're going to have a whole bunch of risks along the way about how we get there. We are going to change to a more resilient future because the trend we're on is simply unsustainable. We will have everything damaged if we don't break this trend. And the science is there, and the economics is overwhelmingly in favor of doing this. To achieve this transition, it requires building it into home financing, building it into insurance, making it a mainstream part of banking, insurance, and government practices. It also requires some collaboration between some of the key partners. So our group at the university, we're working on science, but we're increasingly trying to be more vocal, speaking to broader audiences about where these solutions will come. I really thank everybody for choosing to spend some time here today. And for Yvonne, thank you for giving me this opportunity to speak to the audience. And with that, I'd like to open things up and look forward to speaking to you and answering your questions. Thank you, Yvonne.
Thanks, Paul. That was fantastic. You really laid out the case to say why this is so important, and you can understand why the regulators are requiring the lenders and the mortgage insurers to come up with plans both for the transitional risk as well as the physical risk. And I know you've met with a variety of different parties. What would you say to people who are on that front line in terms of developing that policy and working through the plan? And I know you'd also talked about sort of like the phases that would take. If you can elaborate more on that, I think that a lot of people in the audience would really enjoy hearing your view on it.
So thank you, Yvonne. So for everybody, again, I've worked for several decades on the physical side. So I'm quite passionate that both elements are really important. We really, really need to reduce our emissions. I bought an electric car years ago. I was the first one in my community to need to get it all wired up and all of that. The emissions reduction is incredibly important. I just don't know a lot about that. I'm doing what I can as a citizen. As a scientist, I specialize on the physical risk. On the physical risk, I think that the lending community needs to better understand the chance of extreme events that can result in default, can result in a real impact on the ability of your customers to follow through and do what they always want to do, which is to pay for their home and pay off the mortgage. We had the experience in Fort McMurray in 2016. More homes than at any time in Canadian history were burned to the ground. They're simply gone. They were of no value. The home was completely destroyed. Some of those homes did not have insurance. In Lytton, half the homes that were burned to the ground did not have insurance. So the expectation of the lender that they would recover through insurance, it simply wasn't there in Lytton. Most homes in Fort McMurray did, but there were a number that did not. And that led to a number of challenges. Some of those homeowners got given money through charities, through the Red Cross, etc. But how to think through and anticipate how these extreme events today and the science predicting that more climate extreme events, whether they're fires or floods, are going to happen in the future. At the moment, Yvonne, one of the sessions that we were able to do together a few years ago focused on flood. The most common hazard in our country is still flooding. It happens to more homes more often, more frequently. In the last few years, flood insurance has been introduced. The insurance companies were careful to introduce it first for people that are really unlikely to ever flood. If you're on the top of the hill, it's pretty easy to get flood insurance. But if you are at high risk, in most parts of Canada, flood insurance isn't even offered yet. And there's this conversation about what needs to be done for really high risk flood people. But at the moment, most of them don't have insurance. So but they have a home, and are they borrowing money, and do they have a mortgage, etc. So thinking through and understanding and modeling and anticipating what extreme weather today and what increased extreme weather tomorrow might mean for your finances of your company is quite critical. And building into that process to say, well, here is a home that is in Lytton, but built with these extra $5,000 of features. They are far less likely to have fire damage than the home that doesn't have all of those features. Can that be built into the home financing process? The demonstrated and proven knowledge about resilience can be increasingly part of understanding. And also this global pressure on disclosing climate risk that is on all the lending institutions, on all the insurance companies, the pensions, etc. Disclosure of risk is being pressed for at several different levels. One is to tell the regulator, across my company, I have thought about physical risk and I have thought about transition risk, and for my company, here's what the numbers are, and here's my plan, and here's what I'm doing for my bank, for my organization. But there's also a push saying, what does it mean for investors? Perhaps, and I've seen some regulators talk about it, what does it mean for individual customers? Can you disclose to this particular customer, you've applied and you'd like a mortgage with me. Here's what my knowledge about physical risk means for you as a customer. By the way, I know that you're in the floodplain. Did you know? I know that you are in an area that is designated as high risk of wildfires. Did you know that, customer? Is an expectation about disclosing climate risk something that will be at the company level, but increasingly move to the shareholder, but also possibly as far as the customer level? What knowledge can be disclosed by insurance companies, by banks, by other financial institutions directly to customers to help them. Again, so I don't go on too long, Yvonne, you know when you start me. Insurance companies, some insurance companies have started processes where they send alerts out. There's a storm coming. It's coming near your home. It's going to be there tomorrow. I thought I'd tell you. Did you hail coming toward Calgary? Did you put your car away? If your car's in the garage, it doesn't have hail damage. If you leave your car in the street, it has damage. By the way, there's a storm that might get there in an hour. Can you put your car away? Some people are home and could do it. Insurance companies are building it into their business practices, disclosing, sharing climate risk with customers, with shareholders, with regulators is going to be increasingly expected in the future. And having that based on science and knowledge makes that helpful disclosure so that it actually can improve the outcome for the customer and the outcome for the business.
And you and I had also talked about, the challenges around modeling and figuring out, what you might think, but maybe what more the science is showing, as well as how that plan will transition over time in terms of what you know today and what as lenders and financial institutions learn about it and how that will develop and be, let's say, 5 years from now.
Yeah, a conversation about modeling is a very long conversation, and there's others who know more than I do about modeling. I do economic modeling when I do it, and I work with climate modelers, etc. One of the things that for me has been helpful is there is a community of people who I would do what's called hazard modeling. How high will the floodwater get? How big an area will start on fire with a wildfire? Which areas will have strong winds? So climate modeling is a very mature area, and climate change, certainly if you're looking ahead 10 or 20 or 30 years, we know about with great certainty what the climate's going to be over a 10, 20, 30-year time frame, and we know how to predict where hazards have happened and the likelihood of them in the future. The hazard modeling is a mature area. Most financial institutions don't actually want to know whether it's windy or raining. They want to know whether there's damage or whether people will be able to financially pay their mortgage, whether people will make a claim against insurance. And that requires understanding the hazard, but more importantly, understanding your vulnerability to the hazard. Yvonne, you and I can be side by side and both be affected by the same wind or the same wildfire, and you have no damage and I have terrible damage because you got ready and I didn't. And that's not the hazard. That's understanding the building and what was done to the building. I have an image not with me today that is just two houses side by side, and one is burned to the ground in a wildfire, and the other one, the people are home and they're in their backyard relaxing. And so if you prepare your home and do the right things, it may not eliminate the risk, but it certainly can greatly reduce the risk, and we have very good outcomes. And if one lender or one insurance company knows more about what those features are, they will do a better job getting the good customers. They will get the customers that are less likely to default and less likely to make a claim. They will be the ones who are in a better position to make the profit if you know how to identify the customers with lower risk. And again, one of the really simple things that we saw the insurance companies do at the university, we put out those brochures I showed you a moment ago for the various hazards. And at the end, there's 10 or 12 questions. Walk around your house and answer these questions. And if you see this bad thing, give yourself a score of 10 or 20 or whatever risk number we assigned to the different questions. Well, immediately we saw the insurance people start asking their customers, were they doing these things? Because, it was smart advice for the homeowner, but the insurance guy said, well, I should know whether they're doing that. And they started asking customers for the first time when we put this out, do you have a backwater valve? If you have a backwater valve, you're less likely to make a claim because the rain got into the basement. Do you have landscaping so that if it rains, the water moves away from your house rather than toward your house? With wildfires, have you put a roof and siding that's resilient to wildfires? If yes, you're less likely to have a fire. You should have a lower cost for insurance. You should, I don't know what advantage you get on your mortgage, but you're less likely to default on your mortgage because you've done the right things. Anyway, the science is there. I think companies are going to increasingly be challenged through modeling, but also in the thinking through about the individual relationships, how to build this resilience knowledge into their practices.
Yeah, and that's in line with what we see as well, that data and analytics information on the homes can make such a difference in terms of decisioning and what really impacts the books. And the risk can be extremely different between one and another, whether, if it's either around the borrower or, to your point, on the property. So that's very interesting. I know that there's some people that were asking about being able to share some of this information. So I know you've got some of those brochures. So maybe afterwards we can also share that with the audience. And it sounds like you're very open to people sharing that information broadly across whether it's friends and family or from business, in terms of, their stakeholders and other ways that they can help their clients on this front. There's one question that we have around carbon tax and what your opinion is, if you support the carbon tax as imposed by the feds, and if you can elaborate a bit more on that.
Yeah, and on the other one, Yvonne, absolutely. So the materials we have, we would be more than delighted for anybody to share with whoever. And those who want to do it on a bigger scale than just looking at them themselves and sharing it with friends and colleagues. But if you'd like to do something bigger, just let us know. But we're even comfortable with people putting their own branding or whatever. We're just quite keen that the content, we get some sort of acknowledgement that it's our content and that doesn't get modified. But if anybody wanted to go down something bold that way, we're always really excited to work with anybody who will help people better understand. On the carbon tax, so my training is in economics. One of the things that economists have experienced for many, many decades, if there is a behavior taking place in society and society would like to change that behavior, the use of things like taxes are very effective and powerful to do that. So there are less people who smoke today, in part because of awareness and knowledge, but there's taxes on tobacco. The use of alcohol is very different today than it used to be. And so taxes on alcohol. There's various different issues. The carbon tax takes the same spirit, applies that to society is better off if there's less carbon out there. And you take these proven practices of how to change behavior. One of the ways is to put a tax on. The commitments made in this case by the government was that the money collected for this purpose was also going to be tied to other things related to how they would encourage less use. So the carbon tax is supported by me, but supported much broadly by the insurance community, by the economics community, as a public policy goal and tool and mechanism to achieve the transition from a society where we're using too much carbon now. And that's one of many things, but one of the prominent ways to get people to use less carbon in the future. So I support it.
Fantastic. Well, we really appreciate your time. And so we're going to wrap up. I want to give you a big thank you, Paul. Lots of really helpful insights. Really appreciate you sharing your extensive knowledge on the topic. And a thank you to the audience for joining us today and participating in the session. As noted before, soon after the webinar, we'll share the webinar recording, presentation, and other information. And right after you log out, we will do a quick survey just to get some feedback, what you liked, what we can improve upon, any topics of interest for future. And if you have any questions, either for Paul, he had mentioned earlier that he's got his email there, or you can reach out through us. And also, please feel free to connect with anyone at RPS, on the RPS team, if there's anything we can do to help you at any time. And so with that, we hope that you, your families, and colleagues all stay healthy, happy, and safe, and on a day today, like today, probably warm. And again, a big thank you to everyone who participated. And again, thank you, Paul.
Thank you for the opportunity. Take care, everybody.
Thanks.